Hey everyone, DayTraderRockStar here, and probably one of the most important videos I'm going to be putting out in a very long time. Just going back over the last few weeks and watching the market, again, being very choppy and stuff. I started throwing out sector rotation calls about 3 weeks ago, sector rotation calls, and it's because I started noticing that groups of stocks have been moving into the same patterns, and that's one of the first characteristics you want to look for when identifying a sector turn, or maybe a sector rotation, which we were calling it, where money's coming into a sector now where maybe it hasn't been. And a lot of these sector calls are set up off of their charts, because the majority of the stocks in that sector will look the same, and that's one of the another characteristic is you just don't want every stock in that sector looking something different. You want it to be following the same pattern, and those patterns play out perfectly. They do, and over the last 3 weeks, 4 weeks, you know, the setups have worked tremendously, and we've made you know, so many great trades off of these, and we're going to continue to do that. I mean, because they are just setting up over and over. It doesn't matter about the market conditions. It's about recognizing channels when you see them, how to build channels, how to use the 5 indicators to give yourself the best possibility. And I want to try to go over that today. I want to try to go over and review those channels that we've identified and why we identified them, what, you know, what's next. All right, so these are some of the indicators that I use. You know, and again, if you follow me on DayTradingRadio.com, you know that again, I preach this every day as live. While I trade live, you know, we discuss it as it's happening live. But I'm always watching the stochastic indicator, and that's probably my #1 indicator. And then 4 of the indicators that go along with that is I'm trying to trade off a lower trend line or a trend line in general. It has to have a recognizable pattern, and we'll go more into that. The 200 period moving average, or an area of support and resistance, also comes into play, and then the reversal candlestick. So, and in that, there's all kinds of techniques. You know, as long as you know, if you do something for a long time, you're going to know certain little tricks of the game to help you get where you're going to get. And I use a method called the 1-2-3 method, which helps me identify channels before they happen. Now that's the key, to identify the channel before it happens. You don't want to see a channel, it's like, oh man, it bounced over here, that's a perfect channel. I want to see that channel here. Like, you know, I want to start picking it up and saying, wow, if we get down to this level, this is where I want to start buying. So this is exactly what I do, and that's how these setups come about. We see them happening, we take the position, and then you see the results from that. All right, you see the results each and every time. So that's important. So that's what we're going to go over. Hopefully you enjoy this. CHK was one of the natural gas stocks we were looking at this time. It was right after the beginning of June. And again, it was just oversold stochastics, lower trend line of a channel. There was even a nice downward channel line here, 200 period moving average. We're chopping around it. We don't want to get too exact on everything, though. We broke down through the 200. That means it's bearish. I don't go by that at all. I mean, there's too many hard rules in books and stuff that people could read. And I've been doing this from the early 90s and gone through those books, and you see that, you know, anything that you write down and put, you know, kind of put in a hard coded is due to be taken out by the markets. You know, you don't want to just give yourself. You want to understand levels of risk. You understand higher probability areas, and that way you could hold on to your trade longer and not get flushed out. Encana was another stock, because I was saying, all right, great channel. I was able to recognize that channel. Again, we're recognizing this channel basically, you know, right around here. We're like, all right, you know, I'm drawing this in here, and I'm saying, all right, we got a trend line set up here, and then you're going to look for the oversold stochastics and everything lining up. But even a better idea, like, you know, then we start looking at the other stocks in the sector. And Encana is that stock, and again, we could see that 1-2-3 method. Actually, we could probably just drop this down a little. Again, a lot of these channels that I build are based off the 1-2-3 method, meaning 3 pivot areas, usually at a high area. But we're looking at this upward trend line and the downward trend line. So we counted this as a pivot, this area as a pivot, and this area as a pivot. And then if we're going to say, well, we're going to make a parallel line, and this is actually another good example of a trick of the trade. This is what we call a head and shoulders, slanted head and shoulders pattern. And it really is a trade I like, because I trade this pattern as one of my recognizable patterns. You have the inverted head and shoulders pattern, which you can see kind of here. And when I talk about a pattern like this, the head and shoulders or an inverted head and shoulders, these are topping and bottoming patterns. These are patterns that pretty much play out for what we call a measured move. And you can see that the bottom is being put in here because Stochastic getting oversold, and we're making little higher lows here, and eventually we break out of that. And that was a good example of a slanted, downward slanted inverted head and shoulders. And here was a great example of a regular head and shoulders. And reason is, you can see the Stochastics oversold, oversold, and oversold. Yet the price was making highs, and to make a lower high here, which that was the key. That was your divergence, saying that we're going to break down. Now, when you start to see this breakdown, how do you figure this? Well, you already have this measured move. You also know that, the measured move from the head and shoulders is basically from the head down to the neckline, and you extend that out to where the breakdown is. And you can see that's where you're kind of measuring out. You would like to say, watch for a bounce in that level. So with that level actually coming into play with this lower trend line, we could probably make this a pretty decent channel by just adjusting some of these lines here a little and just getting them to the closing prices. Again, I typically use my closing prices, but in some cases I use the candlesticks tails too. Really depends on what the market's telling you to use. But if you just bring it down to the closing, you'll see that these channels really play out. And that measured move, the combination with the measured move and the measured channel, this was a great level right there. And that was setting up the same time CHK was setting up, and that's the move it's made from that. So after that, we were looking at the coal stocks, and I called out the coal sector as a potential. And again, it's basically the same thing. And this is how important this video is, because you're recognizing a couple things. It's important to measure out the market in a way that you see things happening before they happen. Here we we measured out the 1, 2, 3, trade 4, 5, 6. Remember, you're in the area. Stochastics lining up really good with 6, so you have a higher probability setup there, because that's another indicator. Oversold Stochastics, lower trend line, recognizable pattern. Again, the 200-period moving average not playing out here, but those three are the combination. That 3 out of 5. I'm always looking for oversold, recognizable pattern, lower portion of the trend line, usually in a downward channel. That's my specialty. You could trade it to the upside. You could take the shorts here also. It all works. It's a matter of having confidence in the system and taking the trades and trading, pretty good quality companies. And there's hundreds and thousands of companies out there to choose from. So as long as you're into something that is not going to disappear overnight, you're ahead of the game. And when I say that, this is what we're doing. We're taking the risk out of the trade. So BTU was that setup. Again, CNX was also on the watch list. And again, this was a different setup. This was the oversold Stochastics. And we know we're in this downward channel, but this one's holding much greater strength compared to the other coal stocks, so it was on the watch list too. And again, the PCX, you look at the same type of setup, and you're like, wow, this is right down on the lower 1, 2, 3 method. Or one pivot, second pivot, third pivot, trade the fourth pivot. And again, because all those coal stocks were setting up similar, we call for the sector rotation and a move in the coal stocks. And then 2 weeks ago, we talked about in last week's 10 for 1,000 watch list, we talked about the oil rigs, and as that sector was setting up. And again, very similar situation here. You see a downward channel, but we saw the Stochastics pulling back quickly here. And we knew that we were going to get the divergence. So once I recognized that, I said, well, we're going to look for a reversal or a W pattern, what you call W pattern, because the Stochastics pulled back, and we're maintaining off the recent lows. And we made that W pattern. That was a perfect trade on the site too. And again, along with that, there was other stocks that are setting up with the rigs. Noble Corporation, NE, and again, you can see the recognizable pattern and everything else that goes along with this. Again, we talk about the 1, 2, 3 method a lot, and the 1, 2, 3 method, I'm going to actually be doing a webinar, free webinar, Monday, this upcoming Monday, the 25th, at 4:15. 4:15. So if you you have to sign up for it. It's on DayTradingRadio.com to sign up for it, and I'll let you into the webinar. I'm going to be going over the how to apply the 1, 2, 3 method to trading futures too. So we're actually, that's going to be based on the 1, 2, 3 method and how to determine how to build channels and stuff. So I'm glad to do that as a review. All right. So sign up for that. So that was Rig, Noble. Even to take a look at Diamond Offshore, which is another rig. This was also again another old watch list play. You can see the downward channel break, the first retracement, and this happened when we called a rotation in this, and we had that nice move up to that level. Lots of times you'll see my charts go through. If you're a member of the site, you get these. You get the 10 for 1,000 watch list on every Saturday, which I'll be working on right after this with the next rotations. And you'll see these, and they'll tell you the buy triggers, the targets, and these are the stocks we pretty much follow each and every day and update you on. So it brought us to last week. Now, last week, the 10 for 1,000 watch list went out, and the focus was on steel stocks and calling for the steel rotation and aerospace defense rotation. It was two sectors that were going to rotate, and the best bet from last week was MT. And again, looking at why we're looking at something like this is, again, it's a recognizable pattern. We're lower part of the channel line, and you could actually see points that we're pushing up against right here, and we have a little dip down here, and we held it here. So now we know that any type of reversal back down to that level needs to be bought, and that's exactly what we did. Bought into this because we had the oversold stochastic, we had a recognizable pattern, and this was actually the alert that went out. I actually bought into the trend line. You could bought it on strength, or you could buy it on the on weakness on the trend line. But once you get that setup, you can see that the channel still looks good, the stochastic still look good. This is because of these setups in these major sectors. This was one of my calls for market moving higher off of this, because I knew all these setups were happening, and a lot of these are still setting up. The MT, the U.S. Steel continues to, again, that was also on the on the sector reversal, U.S. Steel, and that's a tough one to call a bouncing, and that was called perfectly last week. We went out on Monday, and it just started moving up the whole day, the whole week. But the important thing was to cross over on the stochastics, or the oversold stochastics, and the divergence. First trend line break, first bounce, the pullback, holding off the recent lows, but the stochastics became oversold, and then the W bounce happening right there. So, that's why I think it's so important to review the last month's trades and why we took the discipline. We took the risk out of the market, out of the trade, let the stocks come back to our levels, took the trades, executed them, took profits into it, and that's what we got to continue to do. Now, the other sector that we called was Lockheed Aerospace and Defense. And again, you can see some of the alerts and targets here. This was LLL, which is L3 Communications, which is, of course, is a defensive stock. And the reason we looked at this one is because of recognizable pattern, oversold stochastics, lower trend line. It was textbook. So you can see the move we had this week off that trend line. The other stock that was really set up perfectly is Rockwell Collins. And right off this trend line, it powered right up here, went beyond our target. We had a target of 59.80 plus. It was all the way up to like 61. Friday it got hammered, but it already made its move, and most of the people were out of the trade at that point. But it did drop on Friday on some news. But the fact is that it got the bounce off the trend line and moved up the whole week, took profits, and again, that's half the game. It's good. I always find it. Because of the style trade and the methodology here, taking the risk off, it's easy to find the position. It's hard to take the profits because it's such good, and you just never know how far they're going to go. Lots of times these setups break out in their major moves. RTN was the other aerospace defense, and again, that was a very similar pattern. You're noticing that theme here. You're noticing that 1, 2, 3. Soon you'll be able to, actually you can put a 1, 2, 3 here. We'll just call this 2 then. It doesn't really matter what direction they go in, as long as there's 3 pivots. And when you have 3 pivots, that means 2 of them are going to be on one side. You draw that straight line, and that one you draw the other line. And then from that point on, you have areas of interest. So RTN here came down to that area of interest. And again, not to say that, oh, we broke through that line. See what happened? We kind of flushed through it and then bounced back up into it. Every so often that will happen, and that's just part of the process. And then Lockheed was the last one. So just to review, just want to go back over this, how important it is to establish your criteria in the markets. You know, if you're going to be looking for recognizable patterns or using the high probability setup method, you want to wait for those signals to set up, and you want them to set up together. I'd rather have a lower trend line recognizable pattern over stochastic. That would be my number one setup. I would take that trade all the time. If we had just an oversold stochastic and maybe a trend line, no recognizable pattern, then I would probably take the trade too. It's about that lower trend line and establishing how to make that 1, 2, 3 channel. That's important too. The 1, 2, 3 method. Again, we'll be going over that Monday in the webinar. So I hope you enjoyed this. Hope it kind of motivates you to say, hey, this could be done. It's just about taking the trades on my time frame. What's great about this style and this type of trading that I do, enables me to rotate into stocks and let them set up and let them chop. I know I'm taking a risk out of the stock, and I could be in many different stocks, and then as I take those off, I could rotate into the new stocks that are moving up. Long as my criteria is being held and I'm in quality stocks, I don't mind it. It's a good way to supplement your income. What's really good, and I'll just put a little plug out for the watch list now. I send out a watch list every Saturday today, and it sets these up. So it's a matter, even if you're working and at work and you want to get involved in the markets, this is a great way of doing it, because you might see, well, he's telling us to watch, this sector next week. I think I'm going to actually call my broker and say, hey, I would like to get in on this. And take those trades and not have to be so stuck to it. That's why it's good. These are kind of a little longer term swing trades. I would say 3 to 5 days. Try to get the maximum potential out of them before they start consolidating. But other than that, there's so many setups that these setups actually work good on the 60-minute chart. They also work on a 5-minute chart. So intraday, I'm trading the ES on these similar patterns. As long as the patterns are showing up, I'll see that pattern, take it out. And same thing on the individual 5-minute charts of the individual stocks. So it's just a matter of supplementing different ways of trading, but sticking to the same criteria across the board. All right, that's it. See you guys in the market. I'm Day Trader Rockstar, and for DayTraderRadio.com.